Welcome to this course on standard costing variances. In this course, you are going to learn or you are going to understand how to compute variances in standard costing. The variances may be with respect to your sales, variances may be with respect to your cost. So how you are going to find it, what are the methods and procedures for finding variances in standard costing? That's what we are going to understand. And in order to proceed further in this course, you should acquire certain basic knowledge in standard costing, and that is available in my earlier course, Standard Costing Techniques. Let's get started. So what are variances in standard costing? Variances is nothing but the difference between the budgeted and the actuals. So if budget is not equal to actual, then there is a difference, and that difference is called as variance. So the variance can be on both areas, that is, it can be on your sales, it can be on your cost. Sales variance can be your actual sales differing from budgeted sales, and cost variance can be your actual cost differing from budgeted cost. So in this session, we are going to focus more on cost variances. And what are the cost variances, or why there can be cost variances? It may be because of three reasons. Number one, there is a variance in material cost. Number two, there is a variance in labor cost. And number three, there is a variance in overhead cost. So if there is going to be variance in material, labor and overhead cost, obviously there will be cost variance. So in this session or in this course, we are going to understand in detail about variances in all these items. In this session, you are going to understand what is material cost variance. Material cost variance is nothing but the difference between the standard cost, that is your budgeted cost, and actual cost. So if you want to express it in a mathematical form or in an equation form, you can very well say material cost variance, that is MCV, is nothing but standard cost minus actual cost. So if you want to expand this even further, then you can do it. So what is standard cost? Standard cost is nothing but standard quantity multiplied by standard price. So that will give you standard cost. Then what is actual cost? Actual cost is nothing but actual quantity multiplied by actual price. So it is as simple as this. So if you want to find material cost variance, you should compare your standard cost and actual cost. So if your standard cost is greater and actual cost is lesser, you have a favorable variance. And if your actual cost is greater and if standard cost is lesser, then you have adverse variance. That is, you will have a positive figure when you have a favorable variance, and you will have a negative figure when you have an adverse variance. That is with respect to the outcome. So you can find the material cost variance simply by comparing the standard cost and actual cost, and standard cost is nothing but standard quantity multiplied by standard price, and actual cost is nothing but actual quantity multiplied by actual price. Now we have to understand one important point, that is why there is going to be a variance, why your actual cost is differing from standard cost. Understand, material cost variance arises mainly because of either in material price or because of difference in material consumption. So the major contributor for the variances in material cost is either the material price, which is differing from the standard price, or the material consumption, which is differing from standard consumption. If you notice here, you have a standard quantity and you have a standard price, but actual quantity can be different from standard quantity, and your actual price can also be different from standard price. In that case, obviously you will have a difference. So By analyzing the material cost variance, you can find out where the change had taken place. So understand, analysis of material cost variance is done by dividing it into two parts, namely the material price variance, because there is a change in cost because of price, and there is a change because of usage, so that is called as material usage variance. I'll just repeat, here we have found the material cost variance by comparing the standard cost and the actual cost. Why the standard cost and actual cost are differing, and if you get into the reason, your actual quantity may be differing from standard quantity, so there is a change in the quantity consumed. So there is a change in the quantity usage, so we call it as material usage variance. Similarly, your actual price may be differing from selling price, so there is a change in the price, and that is called material price variance. So if you want to study the material cost variance, it is possible only when you identify the material usage variance and material price variance, which we will see in the next sessions. In the previous session, we have understood that material cost variance can happen because of variance in material price and variance in material usage. In this session, let us understand what is this variance in material price. See, through material price variance, we actually measure the variance which arises in material cost due to difference in actual material price and standard material price. That is why you are getting material price variance. It is because your actual material price is differing from standard material price. So how do you find this material price variance? If I want to put it as a formula, then I can say material price variance is nothing but the difference between this standard material price and actual material price multiplied by actual quantity. So you have to find the difference between these two, that is standard material price and actual material price, then multiply it with actual quantity so that you get material price variance. Now a question is, why the material price variance takes place, or who is responsible for this material price variance? Generally, it is the responsibility of the purchase department to purchase materials from the market, right? So it is the responsibility of the purchase department to purchase the materials from the market. So purchase department is expected to perform its function very prudently so that the company never suffers a loss due to its inefficiency. And purchase department is held responsible for adverse price variances which arises due to reasons which are within the control of the department. So when there is a material price variance, automatically the question goes to purchase department, because they are responsible for purchasing the product from the market, and if there is a adverse variance and if those variants could have been controlled, then this department will be held responsible for such a adverse variance in the performance. So what we have to understand is whether this price variance is because of controllable or uncontrollable factor, because we have both controllable and uncontrollable. If things are within controllable and if there is an adverse variance, then the responsibility should be cast on the particular center or a department for not taking correct action. But if it is uncontrollable, if it is not within the control of the purchase department, there is a high level of change in the price because of the macroeconomic factors or the factors beyond the control of the department, then in such cases it may even warrant to change the standards. That is, actual price should reflect standard when standards are not in sync with the market. It means the standard price should be altered to match with the actual price if actual price is going beyond the manageable position.